Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, July 27th. Happy Wednesday. Today is Fed Day, so happy Fed Day. Hopefully you were long as we got a really big rally off the Fed meeting. This is when the Fed did their announcement. And we got a 102-point rally in the S&P. So quite a bit going on here today, and we're going to jump in that. We're going to talk about it and kind of look at what we might expect. Let me clean this up a little bit, and we'll take a look at this and dive a little deeper. So in the black here, this is the ES, or the substitute for the S&P, the S&P 500. For today, the gray is the overnight session, and as you can see, buy, and then we start kind of going into this pause mode until the Fed announcement, and that's at 2 o'clock right there. And you see this, we got an initial kind of bounce up, bounce back down. This is exactly what I thought we'd have: straight up, straight back down, and then I thought we'd bounce and probably go this way. And we talked about it in our live trading room today. And the reason is we knew that there was a 75 basis points, or 3/4 of a point rate hike was already assumed. And that was by stats, there was a 75-85% chance that was going to happen. And I was looking at that, and if you think about it, a 3/4% increase is not good for anybody that's buying anything, right? It makes your cost go up, especially housing. That's the biggest, concern of mine, is the housing market, right? And as it turns out, the National Association of Realtors pending home sales index dropped. They were expecting a small increase today, and it dropped by 8.6% in June. It's a trailing thing. So they were expecting an increase, and instead we got a decrease of 8.6%. That's not small, right? That's a big number. Then that was before the Fed just raised rates today, right? And so what's that going to do to housing? And to put it in simpler terms, if you're trying to buy a house, a $500,000 house, whatever, $1 million house, doesn't matter. Your cost just went up pretty dramatically today, and everybody knows this, right? And again, when that happens and you get a yay, everything's great, we rally 100 points, it kind of makes you scratch your head and go, not really understanding that, and that can be for multiple reasons. Maybe everybody's short here, and this is short covering rally and all that kind of stuff. But more likely is the fact that the market is always a leading indicator. So the market's looking six to 9 months out in time, going, well, you're getting the pain out of the way, and this gets us closer to a turning point, so we can start getting more upside and all that kind of stuff in the market. And yes, that makes a lot of sense, and that's the only two rational things I can come up with, because I don't understand this, because it's not good news for the overall market. We typically, historically, I've been trading for 34 years now, and historically, when the Fed cuts rates, yay, and the market rallies, things get cheaper, right? When the Fed raises rates, costs go up and all that kind of stuff. And we know why they're doing it. They're doing it to try to slow down inflation, rampant inflation, all that kind of stuff, right? So all that being said, I don't trust this rally one bit. I want to fade it to the downside and all that kind of stuff. But at the same time, we have to trade the price that we have and the charts that we have. And let me show you what I think is going to happen here. And we'll just look at the ES. That's the most, to me, is the most broad representation of the overall market. And as you can see, straight down, straight up, straight down, straight up, up, and we're just looking like we're pretty bullish here, right? The market is has been in a pretty oversold territory, so any kind of move like this is reasonable. It's not out of the ordinary. But where might we go? So let's look out here on a year chart, and you can see this is, we've been down, 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 and we go lower lows, lower high, lower lows, lower high in this channel, lower low, lower high, lower low, lower high. And now it looks like we want to break out, right? And we might. This channel, perhaps, goes like this. I don't know. But what we would have to have is higher high, higher low, higher high, higher low, like that, and start a real sustained move. Until we get that, I'm not buying this. I'm not believing in this rally because we've had this before. We've had the head fake stuff. There's a big one right there. There's a big one right there. There's a big one right there. And they all end the same way. And we rally. And then we end up going back down here. Now, again, this time, yeah, maybe it is different. We won't know that until we get next month's payroll numbers, CPI numbers, and all that kind of stuff. But first, we have to go over the big one tomorrow is going to be GDP, which will show that we are, in my opinion, will show that we are, yes, we are indeed in a recession. The definition of a recession since 1974 has been 2 negative quarters of GDP, right? Well, all of a sudden, just so happens a couple days ago, we decided to redefine what a recession is, handily right before the numbers are going to be released, which is, and I'm not saying that from a political standpoint. It happens when either party is in power. It's just the way it works, right? So expect a lot of him-hawing around tomorrow after GDP is released. It will show that we're in a recession, I believe. The talking heads will say, well, yeah, but this time it's different because, since 1974, it's always been that way, but this time it's different because whatever, fill in the blank, right? But nevertheless, here, where we might go, these are voodoo lines here. You see this red line? That's a strong level of resistance. I don't think we probably get across that. I think we come up, maybe hit that and fail, and maybe start working our way back down here, maybe, take out that low. If we break this, yes, that's going to if we break this and go higher, that's going to start me believing, yes, maybe we are in an uptrend here that might last. But the bottom line, we've got to be really, really careful here because this thing can turn on a dime and we can drop as fast as we're going up. And again, remember back here, if you look back here, this was a face-ripping rally straight up, and everybody thought, oh, well, this is just a blip. We're about to take out all-time high, and, it's going to be great, and everything's great, and all that kind of stuff, and we just go down, 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 right? So be careful. I haven't changed my stance, at all. As far as being careful in this market, I'm sizing small and all that kind of stuff. We're still absolutely able to trade this. It's dicey. It's tricky. You got to be able to switch sides very quickly from bullish to bearish and bearish to bullish and all that kind of stuff. Right now, the only trade we took off all of our trades ahead of this Fed meeting because we knew it would be a big deal, and in the bias account that I manage, right? So I'm completely flat except for we've got a small hedge at 39.50 on the downside in case this thing rolls over tomorrow, and it goes out for a couple of weeks. We have plenty of time on it, and it's small size anyway. But, we'll come in and evaluate this tomorrow after GDP. Don't forget tomorrow, also after the close, we have Amazon reporting and Apple. So tomorrow's a huge day for us. So if you're trading, get some sleep tonight, drink a lot of coffee tomorrow, be on your toes because we're liable to be another wild day today, like today. So other than that, the best thing to do is trade small. Really manage your risk. Don't let anything get away from you as far as, trades that are getting in trouble. Cut it loose, very quickly. Be very careful. I'm trading the indexes more than anything else. Just got to think that's easier. But for now, that's all I've got until we get a little further out of here. We see what happens tomorrow. And then into next week, we'll have another string of earnings, next week. And then we'll wait on more data to come out to see if we're really at a turning point or not. So we're at a really critical level right here. I think the next biggest place is going to be that red line right there at 4,100. That's the ES. So take note of that. And with that, let me wind it up and try, if you want to jump in here with us at Simpler, come in the main room. We've got a lot of good traders in there. You can come into my room, the bias room, and we do this all day long. I'm posting trades during the day and explaining what we're doing. So come check it out. And other than that, I will see you guys next week. I'll do an update next Wednesday, and we'll go from there. So thanks for the time, guys. I appreciate it, and I will see you soon. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.